Facebook, Snap, Twitter, and Pinterest. We've seen some wild fluctuations in social media stocks this past year. They are one of the best subsectors to trade in the stock market, period. And in this video, we're going to do a good analysis of each, compare them side by side, and pick the best of the bunch to buy. So, without further ado, let's get to it. First, we're going to go over some important stats and have a side-by-side comparison for each. These will give us a good overview of the fundamentals, and then we'll take a quick look at each of their charts so we can make an informed decision for the best one to buy for 2021 and beyond. So first up, we have market cap, right? This is just the valuation that the market has put onto the company. Now we can see Facebook is larger than all of them by far, over 10 times larger than Twitter, and the smallest one, Pinterest, it's over 22 times larger than Pinterest. So as a standalone number, this doesn't mean anything. So we got to look at the other metrics to make something of it. Next up, we have price to sales. Now this metric kind of shows us how well a growth company is doing, and whether or not the valuation that the market has placed upon this company is overvalued or undervalued. Now, of course, this number, you got to understand what's overvalued or undervalued based on that company's sector, subsector, and age of the company. And size of the company too. So for example, Facebook and Twitter are just about the same age. I believe Twitter was founded in 2006 and Facebook in 2004. So just around the same age. And then Snapchat and Pinterest were both founded a little later. Pinterest in 2009, Snapchat in 2011. So they're both roughly the same age, right? And we can see Pinterest has currently a higher valuation based on the price to sales metric than Snapchat does. So this kind of gives us just a slightly clearer picture of the current valuations that the market is placing upon these companies. And by looking at the other metrics, we can determine whether or not we believe the market is undervaluing or overvaluing these companies. Again, price to sales is a very important metric used on growth companies. Next up, we have the PE ratio, the price to earnings ratio. So right off the bat, the thing that comes to mind is you can see how Twitter and Snapchat don't have one because they're negative, and Facebook and Pinterest do. Now, this is because these companies are not yet profitable, or at least in the prior quarter, they weren't profitable. But I know for a fact that I don't believe either of these companies have had a profitable quarter yet. Now, if you're new to trading or investing, that might sound kind of preposterous to you. How could a company this big not be profitable, right? But it's actually extremely common. It takes many years for companies to reach profitability. So what these two have accomplished is quite a feat, relatively speaking, right? Now, the lower the number, the sort of safer that investment seems to the community at large. So this can also be a negative because if a company has a very low PE ratio, like in the single digits, then the market is foreseeing that this company doesn't really have much growth to do in the coming years. Of course, that company can totally revamp their business model, and then we can see the price to earnings ratio would grow upwards, right? It would get larger nominally because the market will decide that this company can actually grow further in the future. Now, this was the case actually with GM earlier this year when they started pushing on more and more on their EV narrative and how their company is going to go full EV later on in the decade. Same happened with Ford, and we saw their PE ratio go from the single digits to double digits now. Of course, it's extremely very low, relatively speaking, but if a company is in the low growth mode, you're going to see a lower PE ratio. Now we'll take a look at the last metric, and that is revenue growth. By looking at the four of these together now, we have a clear picture of how these companies are doing and how they're doing relative to each other, especially. When we take a look at just the revenue growth, we would be most impressed by Pinterest having 78% year-over-year growth on revenue, which is actually extremely impressive no matter the industry, no matter what industry or size of the company or the age of the company. And this is the Q1 growth. So it's based on how well did the company do in the quarter one of 2021 versus quarter one of 2020. And most of these numbers are pretty impressive. I mean, this is why these are, highly valued companies. So we can see here, Pinterest currently has the lowest valuation of all these names, yet they have a 78% revenue growth year over year, right? So right off the bat, we can say, and they're already profitable, by the way, already profitable. And while 20 price to sales might seem a little high, it's not really that bad considering some of their peers in the tech industry. I mean, right off the bat, we can see Twitter over here is at 32 price to sales, right? When we take a look at Snapchat, again, a relatively low valuation compared to the other two above it, and a low price to sales ratio, but revenue is sorely lacking. 28% year over year growth is not impressive, especially for a growing company. When we take a look at Facebook, we see a massive market cap. We see the lowest price to sales ratio. We see by far the best PE ratio and a very impressive 48%, 47% revenue growth, right? Now, between the four of these, I think you've guessed which one I want to eliminate first right away. And if you've guessed that it's Twitter, you'd be absolutely right. Twitter's got a horrendous price to sales ratio at 32, extremely high, right? Already overvalued, way overvalued considering the other metrics, but $92 billion of market cap. 66% revenue growth year over year is actually very impressive. Only Pinterest was able to beat it, right? But I just don't think at all whatsoever that Twitter, I mean, this company has been around for over a decade, publicly traded for 7-8 years now, and it's never reached profitability, right? A big red flag. And yet somehow it's worth 2x of Snap. Well, we can see why: revenue growth year over year. So that kind of answers that. But this price to sales ratio is absolutely no bueno in my books. 32 price to sales ratio is extremely high. $92 billion valuation. Never been profitable. They've actually, look at their charts. Let's take a look at their chart just real quick. Now this is the monthly chart. So this is going back all the way since they first started trading. Since they first became public, what was it, 2013, 2014, it's basically been completely sideways. I mean, they're almost right where they started at 7-8 years ago. And we'll take a look at the other three names in a bit, but that's just absolutely pathetic in my mind. So we're going to take off Twitter right now. It's a no-go for me. I will never go long in this company so far as they have the current business model they have. So next up, we have Snap. We can see right away that it has a $47 billion valuation. It falls third among this competition with a price to sales ratio of 12. It's actually pretty lucrative, much better than Pinterest, and aeons better than Twitter, and way ahead of Twitter. I mean, it's almost valued three times more than Snap based on the price to sales ratio, right? And that's why one of the reasons, of course, that we canceled Twitter out when compared to these four. However, we can see why though. We can sort of gauge, have an idea why that's happening. 66% revenue growth compared to Snap's 28%. I don't know what happened there in Q1 for Snap, but not an impressive number for a growth company. Now, let's take a look at the chart real quick. Interestingly enough, I mean, what do you guys see? Do you guys see anything here? I think that first thing that caught my eye is right away, it mimics the Twitter chart actually very closely. It started off at about $22 to trade at $22, and then got as low as $4.82 merely almost not even 2 years later, right? Started to make that climb up. Right, the pandemic started and then it fell down to about $8, and then it's made an insane move to the upside from about $8 to $73, almost a 10x rise within a few months. Well, about a year to be exact, actually. So one could say that this is just way overvalued at the moment, but this is why we look both at fundamentals and technicals. And based on that, I believe that Snap could possibly continue its momentum ride all the way up to 100 and beyond, considering the sheer momentum that it's on right now. And it also heavily depends on the interest rate environment that we see towards the end of the year. It all depends on the Fed, what they're going to do with their quantitative easing policies. And so that really weights that kind of news. But let's go back and look at the statistics based on the fundamentals real quick. With a price to sales ratio of 12, I wouldn't blame anybody, especially looking at that chart, anybody going long here for Snap, but I'm going to hold off. I see better opportunities even in this subsector, but especially because at 28% revenue growth, no, it's a no-go for me. Now, when we look at our top two picks, we can see Facebook here. Market is placing an evaluation 24 times greater on Facebook than Pinterest. Well, when we look at the statistics that are behind the fundamentals, we can see why. Facebook has a PE ratio of 29. I mean, they can start paying a dividend if they wanted to at this point. Its revenue growth of 47% is remarkable considering the sheer size of the company. Almost $1 trillion company, up there with the big names of Microsoft, Apple, Amazon, and Google. and a price to sales ratio of 10, just almost in the single digits. Again, extremely impressive, right? When we look at Pinterest, we see by comparison, a small company, but as a standalone, this is actually a mid-cap company at 40 billion, almost a large cap company. And then a 20 price to sales ratio, we see Pinterest having more upside as, again, 20 price to sales ratio is not that bad. A PS ratio of 20 is not that high considering, let's look at this column, revenue growth, 78% revenue growth year over year, extremely impressive, right? So if they continue at this rate, I mean, the price to sales ratio at this valuation would just go lower and lower and lower, right? So hence the valuation, 40 billion and price of sales of 20. We go look at this column, already a profitable company. Again, impressive considering they're a tech company and a social media company. It is not common at all to find companies that are already profitable in those sectors. So let's take a look at the chart to see which one is the best real quick. First, we'll take a look at Pinterest. So we can see Pinterest only went public just over 2 years ago in early 2019. Now this monthly chart here is not that relevant compared to Twitter's and Snaps because it actually, well, it's just well beyond their IPO price at the moment. But we can see one thing here. Look at the Fibonacci. This is why I love the Fibonacci. The first time it retraced, it bounced right off the 38.2% level and then it broke it, right? But what can we see now beyond the Fibonacci is that we formed higher lows here, right? A double top is already a bullish signal, but if we close higher, which we did, zoom in a little on this candle in late 2020 reached as low as $52, whereas this one reached as low as $54. So this should have been an entry signal right away. I mean, I would have entered at any price over here had I paid attention to Pinterest at that time, I think. And this was only last month. So when we look at it now, when we take a look at it now, considering the environment, again, if we continue on this low interest environment, so it really heavily depends on what the Fed does for these next 6 months. And guys, I strongly suggest you guys follow closely. If you want to be a very profitable trader and investor, especially an investor, you gotta follow very closely what the Fed does. So if the Fed continues with this quantitative easing and just printing money like crazy, giving us a low interest environment, there's no way that Pinterest wouldn't break these all-time highs again. $90 is nothing for this company. So I can see this continuing to well beyond over $100 in this environment. And the reason why I say that, so let's go back at the metrics real quick. Because look at this, 78% revenue growth year over year, already profitable. So Pinterest, I'm definitely hugely bullish on this company. So between that and Facebook, well, let's take a look at Facebook now. So here we have Facebook's chart. We see since its beginning, the company has had a steady, well, about a year after it went public, a steady uptrend. Up until 2018, it dipped quite a bit. And then again at the pandemic levels, but higher low. What is that? That's a very bullish signal. And then it's been clear uptrend up through August and March, a clear channel, broke the channel. Again, a very bullish signal right there. Up until now where we're at. Let's take a clearer look on the daily for Facebook. And what do we see? We see it again, of course. We see the channel breakout, right? Super bullish signal. We see the long-term trend line is rising upwards. No consolidation anymore like it was down here or over here. We can see it having, I mean, where's the top? Nobody knows the top. Is this company overvalued? Well, we just took a look at the fundamentals. It is absolutely not overvalued, especially when considering their peers, but even overall in the tech sector, right? So we're sitting in the mid to high 330s right now. Let's go back real quick to the stats to get a better sense of the fundamentals. Almost $1 trillion company, profitable, 29 PE. Guys, this is better than any of the FANG stocks besides Google. This is better, way better than Netflix. This is better than Apple, way better than Amazon, and growing at 47% higher than Apple's, right? So even though I'm extremely bullish, the clear winner for me on this one is Facebook. Don't let go of this opportunity, guys. Just because it's trading at all-time highs doesn't mean that it's already gone. Oh, that's it. Always take a look. These are far more important metrics than just looking at a random number on the chart saying, oh, it's at all-time highs now, I'm not going to go in. A strong buy for me for Facebook. And I actually did a video on the best FANG name to buy a couple of weeks ago. and Facebook was very close over there. So I strongly recommend it finished second, but I strongly recommend you guys to go and check that link out as well. And look out, I'll be posting a similar video in the coming weeks. All right, guys, if you liked the video, hit the subscribe button, drop a like and a comment below if you have any questions. Peace out.